Hello everyone, welcome back to another weekly watch list video. We're going to go over everything that you need to know for the upcoming week. So let's get right into it with our earnings for the week. So this is Earnings Whispers. You can find them, on Twitter, wherever. They do a really good job at, setting this up Monday, Tuesday, Wednesday, Thursday, Friday, before the open and after the close. So that's your earnings for the coming week. And then we have what I think is going to be the most important data releases that we're going to have. Because what everyone is waiting for is to see if inflation finally peaked. That's what everybody's waiting for. Once inflation has shown that it peaked and it's on the way down, that's going to give investors a lot more confidence to start to nibble and put a little money to work, because that's what we need. So right here, we're looking at this week coming up. This is the economic calendar, all right? The Consumer Price Index, the CPI, year over year. This is the number. These are the numbers, core CPI, on Wednesday, that we're going to really want to pay attention to. And you bet the Fed is paying very close attention to this, as well as every single hedge fund and institutional investors. And then Thursday, you have the Producer Price Index. These are very important, very, very important. So Wednesday and Thursday, keep that in mind. These are two very, very important days. I cannot stress that enough. We start to see inflation peak, and then, maybe things can start to get a little better. I don't mean, we're going to eventually go back to SPY, 480. I'm just saying the VIX and all the crazy moves can maybe start to settle down, because this is insane start to a year. And, what I've been doing and really have to is looking at the weekly charts, because the daily charts, if you want to look at the daily chart on the SPY, that's fine too, but you can just see how choppy it is. Direction, where we came from is really, really tough to see. So a year ago, we hit 404, we hit 405, our 15% correction zone. A technical bounce area on a correction is usually 10%, 15%, and then 20%. You will usually see bounces at those levels. So the SPY bounced off of that here on Monday, and then again bounced off the same level on Friday. So keep that in mind. The Friday's close was still the lowest close for the week. So if you look at this on the weekly chart, you're getting another red candle. All right, so we can see where we've come from. Pre-COVID, we were at, let's see, right up here, right about 337, just about at the 200 moving average on the weekly is where we were before COVID. So do I think it's going to come all the way back there? No, something really, really crazy would have to happen. But do I think 380 can eventually get hit? Yeah, I'm not saying this week, but there's a possibility that the market breaks down further. And if it did, you may see this 380 area on the SPY really be that, time where a lot of money gets pumped in. That might not happen for a while. I don't know. It might not ever happen. But that is the logical next bounce. If the 15% area breaks, then you have to think eventually This will be the next area there for that bounce. And then looking at the cues, again, on the weekly, we saw the biggest red selling candle, even greater than the COVID lows, even greater than this. I mean, this happened obviously multiple weeks in a row. And, you know, the volume profile on this has also been raising. A lot of selling has been going on, obviously, in tech. So again, you closed at a low for the week. Now we have 5 red candles. You had 5 red candles here on the COVID drop before we rebounded. You don't have any other 5 red candles in a row until this past 5 weeks. So has it been tough for tech? Absolutely. That's because the bond yields have gone sky high. The Fed tightening, interest rates going up. You could only assume that those high valued tech stocks and the money that they're supposed to be making in the future that investors pay for now isn't going to be worth the same. So their valuations come back down. So that's what's going on in a Fed tightening cycle. So totally normal. That's totally normal. It's very tough to trade. If you're going long right now, very, very difficult. I mean, you're just catching falling knives left and right. So there we go. We got the Qs, we got the SPY. The diamonds, which is the Dow, DIA, has been holding up a lot better. All right. This one's been holding up a lot better than the tech. And this, a lot of times, you know, they have the energy in there, the utilities, the metals, that type of stuff. That's in your Dow industrials. And it's just holding up a little better. Definitely choppy trading, but the Dow is, sort of holding up better than tech, obviously. So that's our, weekly charts. We could look at the weekly chart. The daily chart for the Qs if we want. I don't think it's really going to show us anything that we don't already know. Like I said, lower close for the week. You saw on the weekly chart the 5 red candles and, the high volume. So where are we going? I have 300 as a level that is possible for a bounce, but we'll have to see. I mean, we're kind of just chopping around and then breaking lower, chopping around, breaking lower. So that's the way that we have been. Getting into some of my watch lists this week, NVIDIA is going to be on my watch. I'm going to start at the daily chart for this one because this is kind of interesting. We had, a consolidation and then we broke that key level. We had a consolidation and then we broke this key level, but then rebounded. All right. This normally, a break of this, even with the overall market that kind of held up weirdly on Friday, and the VIX that actually came back down, this is kind of a little bullish to me. So I'm a little bullish right here that we didn't get a further breakdown on NVIDIA last week. So if we look at the weekly on NVIDIA, you have a green candle there. So you actually closed higher than you did open at. So this, to me, I mean, it had a huge range, but it's hanging around. It's hanging around. And you have earnings here on May 25th. So if we look at the weekly, a lot of times before earnings, if we look here, we got a big move up before earnings, a couple weeks leading up. Right here, earnings came out. We had a beautiful move up before earnings. So let's just keep an eye on it. Maybe we trade back. Maybe there's, a little bit of a trend line we could make here. and maybe we can get a bounce here to 210. Depending on the market, you have these moving averages that will come into play as well. But I'm looking for strength in Nvidia the next couple of weeks before earnings. So let's just keep that in mind. I'm going to be definitely watching this one closely. Apple's another one on the weekly chart that's coming into a really nice demand zone at the 150, closed over the 50 moving average on the weekly chart, an area that we bounced off of here, a couple months ago, and then closed over it right there. And this is obvious demand right here. So you're in that type of zone. We'll see a lot of times, if you look at charts like this, like big companies, and we can look at Microsoft too, because that's another one that's on my watch list this week. It's coming into demand. So if you get any bounce at all on Apple, Microsoft, Nvidia, this is going to pull up the market. Now, if you break down out of this demand zone, well, then you have some real problems on the Qs. So keep that in mind. A lot of stuff is really right at support, but how many times is it going to pierce these levels before it actually breaks? So let's see what happens on these. These are topping candles here on the weekly. It's not really that bullish, but we're still going to keep that on watch. On the daily chart, I want to take a look at our next one on our watch list, which is Target. This is one that we pointed out a couple weeks ago. We saw the breakout. We saw the retracement. That's usually very bearish. We got a little bounce off of there, and then we broke under it. And where I like to set some targets here to get in is this green box here, which was or is basically at the trend line for the week. And you can see that we closed right above the 50, which is very bullish. I just missed my alert here that I have set at 222. So I didn't get notified to really get into a position right here. Probably set it a little too low. But I was really looking for a very good entry. Another thing I wanted to show you, whoops. Let's see. I actually wanted to set an alert on this one. Let's see if we get a break under 270. So let's set an alert here for 270. And by the way, this is Thinkorswim, those that don't know. If the mark is at or below 270, I want to be alerted. So I'm going to create the alert here. If we break under this demand zone, I'm going to be alerted, and that's going to be a very good time to possibly get into puts. So this is why this is setting up right here. Another alert, like I showed you guys I have on Target. If my alerts get hit, then I take action. So Target, I still think, is going to be coming up. It has earnings on the 18th. They have been killing it, doing a very good job. I love Target. Disney, this thing has just been an absolute mess, but it's on my watch list because it's something that, I have young kids, and Disney is just crazy. Booking a trip, how expensive it is and everything else, and everybody wants to go. But they're more concerned with the streaming part of Disney because of what happened with Netflix and a couple other streamers. That's why you've seen some weakness. And you saw the breakdown here of 130, but now it's going down to 110. Where is this going to see support? That's key because this is trading lower and they have earnings. So this is something to keep in mind here on the 11th, but this is trading lower than it was, well before COVID. Just crazy. So that's why this is on my watch list. I want to see where this is going to see possible support and see what earnings show with that one. And then we went over that Airbnb. This is the full trading for Airbnb. When it IPO'd, we're right back down to this level. This level of 130 is absolutely critical. So if we go onto the daily chart, once again, this is a huge, huge descending triangle, making lower highs and now coming back into this demand zone, okay? This support area. If this breaks, not good. So, you know, you might want to keep this one on watch for puts under 130. So this is all going to be in our Discord as well. These picks, we have 1, 2, 3, we have 6 on watch for this week coming up. We went over the economic calendar, the earnings, everything you need to know was into this video, including technical analysis on the Qs, on the SPY. So hit the thumbs up for the video, and I will see you back on the next one. Take care, guys.